Good morning. It's Thursday, October 2nd. I'm Phil Streible, Chief Market Strategist at Blue Lion Futures. So the government shutdown, day two continues. And what happens? U.S. equities go on and make new all-time highs. So the new fear focus, reason why TV's off, is bubbles and valuation. So from my experience, you want to be long the bubbles with proper risk management strategy in place. Now, what and where are the bubbles? Well, everyone will tell you U.S. equities are where the bubbles are at. It's AI, it's the NASDAQ, it's the Magnificent Seven, which is actually underperforming, and the broadening of the U.S. equity rally is continuing. Are precious metals in a bubble? That's probably got to trigger one. Silver a bubble? That probably will trigger someone as well. Cryptocurrencies, we've got them shooting on up here and pushing up aggressively here again overnight, breaking through the 120,000 mark on Bitcoin. Is that a bubble? People will tell you that as well. So if you're long these bubbles in your trading account, there's a significant disparity in performance compared to those who are not. Over the past 25 years and seeing thousands of trading accounts, I noticed a common similarity for those who outperform the market and those who consistently underperform. And what it is that one group is long the bubble and the other one is consistently fading the bubble. Now, I'm not saying there isn't money to be made when the bubble finally bursts. What I'm saying is you need a signaling process that gets you in this bubble and lets you know when you should be getting out of the bubble by knowing when to gross up your position and take down your position size. And then while in the bubble, recognizing that there are cracks forming and a potential action needs to take place. What I usually start with, if I was going to say that the NASDAQ is in a bubble or tech is in a bubble, what I would do is look at some defined risk strategy like a put spread here that involves simultaneously buying and selling put options on the same underlying asset with the same expiration date but different strike prices. It enables traders to capitalize on specific price movements while mitigating risk. Then what I'll do is I'll go to the charts and I'll look for lower highs on the charts. Once the lower highs start to form, I might short a futures contract with a stop loss over that recent contract high or over that recent higher low on the charts. And then I'll start to follow it up by looking at similar sets. Those are the catalysts surrounding when the bubble starts to form. So what I discussed yesterday with gold and its potential bubble, if it were to burst, I would look at, hey, there are higher lows in the dollar, yields are starting to push up, we've got a lower high on the chart, we're breaking below key levels of support, we're seeing improving economic data, we're seeing Fed expectations for interest rate cuts start to fade, and we're starting to see ETF outflows. That's like a checklist to go through. Gold not in a bubble here. Well, it is in a bubble. When's the bubble going to burst? None of those different things have happened here. And you could go through different markets and look at similar things that occurred here. So yesterday we did see some volatility in the gold market when there was news that Trump could not fire Lisa Cook. He'll appeal that in January. Why is that important? Because she is a known hawk in an FOMC voting matter. But does it really matter? I don't think so. More importantly, the ADP data came out, negative 33,000, and that's what really sent this market kind of wild here. You look at the CME's Fed Watch tool for October 28th, 29th meeting, circle that date there on your calendar. You've got a 99% chance of a 25 basis point interest rate cut, and a new development, the 1% chance of a 50 basis point cut. Some other developments that occurred yesterday, soybean prices, they bounced after Trump said he would press China to restart purchases of the crop. So is that a fade? Well, if that was viable news, shouldn't soybean futures be continuing their rally here today off of those lows? They are unchanged here, sitting at 10.13 and slightly weaker here in the overnight trading session. Now, if you look at other markets here, you got stock futures continuing to push up higher overnight, driven by tech after OpenAI shares sales valued the company at an eye-popping $500 billion. If you haven't used OpenAI's products, I suggest doing so. It works as a handsome tool along with what you're doing throughout the day. And this is where small businesses are adapting to AI and AI capabilities for innovation and streamlining revenue growth and also right-sizing their employment workforces. And that's where we get a lot of these layoffs and a lot of the slowdown in hiring occurring. You look at the government shutdown, it doesn't seem to be worrying anyone at the moment. Traders are more concerned about missing out on the rally, and therefore the dip buyers have been very active. So S&P 500 up 11 points, NASDAQ up 90, Dow a little bit softer. I don't generally get too involved with the Dow Jones. The last time I was really bulled up in that market here, that was when the unfortunate accident happened with that healthcare CEO, and it turns out that United Healthcare is the largest weighted stock in there. So of course I'm frustrated because the NASDAQ's going straight up, the S&P's going straight up, and the Dow Jones is tanking like a, it's collapsing over there. So you got to be aware when you're trading a product what the underlying product is. Like if you're trading something like GDX or one of these miners here, you probably want to pay attention to what the weighting is and what those key elements are within those particular stocks within the ETF. And it's the same thing with the indices. That's why I like the futures contracts, because they are a pure price play. If you are interested in being long silver, you buy the silver futures contract. When you start trading things like SLV, well, you're trading a trust here that has fees associated and things like that. They've got to constantly be moving and making different adjustments here within their particular fund. Now you look at some other things with the market here, something that I do and I check on every single day. What's the dollar index doing? Dollar index is slightly lower. What's that going to equate to? We're probably going to see treasury yields slightly lower, which they are. 10-year treasury yields are lower, 2-year treasury yields are lower, and then what happens? The gold market pushing on up here. Gold futures back over 3,900, 3,907, up $9 here. There was a sell-off that occurred right when that overnight session here started, and it was quite aggressive in the silver market, also in the gold market. So what I'll do is I'll look at that and I'll say, hey, who's selling? Because what time is it? What time is this selling taking place? Was there any kind of news driving this particular thing? And then, is this something that is going to consistently repeat? So I'll want to keep an eye and watch that. It's not only how much is a product selling off, it's when the product is selling off that gives you clues as to who is selling in these markets. You look at the volatility index continuing to grind lower, and you look at the current economic environment that we're in, and it really looks like stagflation just continuing here. You look at the US equities again, the S&P 500, 34% off of those April lows. So if a lot of people, when the S&P broke down there, were just unable to adapt and recognize that some of these these deals are being negotiated. And the reality is that we weren't going into any kind of a recession, and that's what people were pricing themselves for. And the worst performing accounts, I could tell you, are the ones that are short the equities, thinking that this recession is still going to play out, thinking that the tariff tantrum is never going away. So you want to be able to signal that these markets started making their first higher low off the April lows, and that's where you would start to look at attacking that market to the upside. Perhaps the opposite of what I started this video with call spreads, with long futures, with stops below those April lows for risk management, and then you'd be able to catch much of this momentum upwards here. So you look at something else that is interesting, is that the quarterly rollover, a large S&P 500 collar by JP Morgan Asset Management's $21 billion hedge equity fund, has these markets really eyeing some of these larger strikes and some of these round numbers. They're essentially short the 7,000 call on the S&P 500 with the futures at 67.73. That's why this market appears to be gravitating towards that particular large strike price, and the put spread that they bought tends to be fading away here. And remember, if you look historically, is that the options that are bought and held to expiration, and an 80% probability that they expire worthless. So we'll want to look at those kind of scenarios and those kind of probabilities when we look at some of these large strikes that are being bought and sold by large financial institutions. Now you look at the global markets here, you got Europe and Asia. Well, European stocks, they extended a record-breaking rally. Investors really ramped up the wagers on the Fed interest rate cuts following that downbeat economic data we saw yesterday, which was ADP. What we'll want to pay attention to is the labor data weakening, and is the economic data continuing to improve? Because we did see a revision upwards on GDP. We are seeing CPI continue to push on up as well. So inflation ramping up, and a lot of times when inflation ramps up, we see US equities ramp up with them. People want to own the inflation that's driving it. You look at Asian shares, they advanced for a fourth day here, and it was really turbocharged by tech firms and that deal between OpenAI and some South Korean chip makers. You have the MSCI index rising as much as 1.2%, and that was the most in 4 weeks. For earnings, you're going to have Tesla's third quarter sales expected to do out throughout the day. And then the economic data, the problem is that we do have this government shutdown, so it might not be released at all. It's factory orders, durable goods. You'll also have Fed's Logan and Goolsbee scheduled to speak. So what is the market thinking about the U.S. government shutdown when it'll end? You've got less than a 1% chance that it ends today. You got a 7% chance that it ends up October 3rd to the 5th. Really, it's when you get out to October 10th to the 14th, a 31% chance, and then you go out past the 15th, it's a 34% chance. So looking at the precious metal flows on the ETFs, and that's been one of the main elements and core drivers to this market here, how are individual and retail investors attacking the precious metals? Well, they seem to be jumping in here aggressively with the 5th straight day of growth and the longest winning streak since September 2nd, pushing that gold year-to-date percentage change by total gold held by ETFs to 17% to 97.2 million ounces. That's the highest level since September 28th of 2022. So you got gold up about 47%, tacking on 0.2% here yesterday. So we haven't breached the all-time high on the intraday basis, but we are starting to push back up. And if we closed right here, it would be a new closing all-time high. Then you go to the silver market, up 16%, so that tacked on 1%. And ETFs added about 5.58 million troy ounces of their holdings in the previous trading session. You got the gold-silver ratio sitting at about 82 to 1. So lots to unpack. I'll be going through the charts here, looking to see if anything kind of stands out. One thing to note is that the copper futures are testing that rally that failed on the second day of the extension upwards when we found out that the Freeport-McMoRan mine was offline. So I'll look at that particular trimming potentially up at this 493 level, and then I'll start to look at things like the Russell 2000, which is starting to turn upwards here, could be attacking a new all-time high. You look at the NASDAQ at an all-time high. You look at Bitcoin, which is pushing on up to eyeing those resistance points here where you get to the 120, 123, 125 mark. So a lot of things to pay attention to. If you guys got any questions on futures trading, we've got a lot of people opening up accounts on a daily basis here. So if you'd like to join us here, send an email to info@bluelinefutures.com. And remember that futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.